This is the chart of silver on the weekly scale. Silver terminated another week spectacular run here, and possibly reaching an end, or has already put in the end to the third wave that began from here. If that is the case, we should be expecting now several months of sideways price action. Okay, possibly testing the support that you see here on the weekly, roughly in the zone of the black lines around 17.5, the 17.25 or so. Okay, and that should go on for quite a while, because if this is the right reading, that this is a 1-2, a fourth wave is normally longer than the second wave. So that should tell us that we are in for a lull, for cooling off period. The alternative would be that this is a 1-2, and that could actually be another one, meaning that the correction is not going to relate to what you see here. It's going to relate to everything that happened since the bottom, but it's going to be much briefer. It's going to be much briefer than if we're dealing with a fourth wave, and that would call for resurgence in the price of silver to well above 21. But right now it's too soon to conclude which one is the right one. We need more price action to go by, and let's have a look at the daily. So we have the 1-2, you remember that. We go up, we have our 1-2 up 3. That's a 4, because that's a clear triangle right here, and that's the surge, fifth leg. It could indeed be the case here that we have one more push higher, that in fact it did not terminate here. I'm going to discuss this option when we see the hourly, but either we have a top in hand, or we're going to have a top in hand very soon. We are unlikely to have another extension that we have seen in the last week, meaning running from under 17 to above 18.6. This kind of run we're unlikely to see being replicated, yes, in the coming week. So if you are not already working with trailing stops, you should, in my opinion, especially if you trade for the short term, short-term moves. You definitely have to work now with tight stops. You don't want to give back all these nice gains if you were sitting around here waiting for it to run higher and you enjoyed this run. It will be really a shame to give back all those gains. So you have to work out the levels that you'll be happy with to see yourself exiting this market for now. If you are dealing with stocks, yeah, if you are dealing with stocks, you're investing for the long term, and let's say 3 to 5% is not something that you want to worry about too much, then you shouldn't do, I think, anything. Just leave your positions. People who normally trade on this kind of time scale, they either check the stocks every 2-3 days or once a week, but if you are much closer to the market, then take action. Take action, be alert to the likelihood that we may have really a top in hand. Okay, so we're coming up on the 2-hour scale with our triangle here and the surge. One interpretation is calling for taking this as a 1, 2, 3, 4, and that will be an extended fifth. And that's it. That's it. That's the top. And that will be your A. It's working on a triangle, and when this is done, and it could be done fairly soon, meaning finished, we would see that. And of course, going to go back to the support level at around 17. So this becomes obviously a critical level for you to watch, and you may want to consider this as an important stop. You also have a head and shoulders here. You see, not perfect, but there is a head and shoulder structure here. Yeah, if it's cracking through this level, it tells you it wants to go there, in my opinion. Okay, and this becomes naturally your next critical level, because if it does manage to rise above this level, I'm not very keen on this interpretation, but technically it's definitely possible. If it runs above this level, what we're going to have to do, we're going to have to treat this as 1, 2. That's going to be our 3, and that's naturally going to be our fourth wave. okay, and the last leg is going to be the fifth leg on the run that started here. And I think we could expect something like 60-70 cents from current level, and that should be it. Yeah, after that I think we would see a steady decline. Now this is the chart of gold long term, that's the monthly. I do see people asking about the possibility of gold actually putting in here the end of that B. Do you remember this pattern that I've been working with for quite some time, that will turn into an A on the monthly scale? That will be a B composed of an A, B, C. Okay, we have an A, B, C, D, E right here that gives us the B, and that's the C. Okay, so we have an A, B, C, which calls for basically a collapse in the price of gold, a collapse that, if you like, would see it breaking the lows of December 2015 right here and going a lot lower. Let me tell you right away, this idea is not out of question. And the only thing is that the likelihood of it actually playing out is not very high. I will definitely switch to bearish reading if I see that gold is unable to maintain the breakout, long-term breakout above the move line that I've got here. This is the monthly. It managed to hold above this for quite some time, and now it's continuing with a surge high. It met incredible overhead resistance, so it's perfectly natural to see it sort of backing off and going for that consolidation of the gains so far. So technical reading of the chart suggests that the further upside is likely. Reading of other stocks and reading of the behavior of gold as priced in other currencies is also encouraging me to consider that gold and silver will continue higher. Okay, so I'm not suggesting that this is a high likelihood scenario at this point. However, I could be wrong, of course, and gold hit insurmountable resistance right now, and it'll start losing steam, bullish steam here, and gradually it comes back and it sinks down here. I would say if it sinks under 1,350, 1,370, that's a grave signal, grave bearish signal, yeah? Then I would say that this scenario will immediately pop into becoming the favorite scenario, that's an ABC complete terminating the B, and perhaps, yes, gold is heading a lot lower. You can imagine what will happen then with the dollar index, yeah? The dollar index is absolutely going to explode, and most other currencies are going to be right on their knees in front of the dollar index. What can I say? I don't see this right now. I see dollar continuing to be strong, but not to the extent of absolutely smashing everything. So we'll see. I'm still favoring the bull. I have my own investment on the bullish side in gold, in silver. That's my preferred reading, that the B is not at hand, yeah, and we have further upside most likely coming. I'm going to show you here the weekly. So I start reading from here, and I suggested that we could take this on the weekly as a 1, 2, 3, 4, 5. The surge came. You can see that we got an absolutely clear reversal week in gold. And gold, by the way, is weaker short term than silver. It's clear to see. And you can see this is a reversal week. So naturally right now what you have to do, you have to consider this as an important critical level, the high that was registered in the past week. Okay, if it does rise back above this level, then it sets the stage for an extension of the fifth leg. Yeah, it tells you that's a 1, 2, 3, 4, very nice, but that's just one. That's going to be your 2, it's going to go up in a third wave. So that's your critical level, but right now it looks like it's seeking to go lower. We have also an issue. We will see the daily. We have quite a lot of signals coming for the momentum as well. Not just here, but we have also on other stocks, gold stocks. Here you can see clearly momentum is sagging for the bulls. We are now on the daily, and I'll go to the 60 minutes. I think we have seen a failure fifth. Won't surprise me very much. Right here, that's 1, 2, 3, 4, 5. This was supposed to go above this level, didn't make it. That's why it's called failure fifth. And we began the correction, and that is a 1, 2, 3, 4, 5, potentially registering 108. Okay, A01, and then go sideways. If we get a nice triangle here over 2-3 days, get a nice triangle here, and then it slides, then you can feel pretty confident that this is the right reading. That's going to be your A, B, C. Gold almost certainly will go back to 1,490 and potentially lower. But this kind of pattern would be very bearish longer term. Very bullish. Would be very bullish because an ABC is a counter trend move. Yes, very bullish ABC, because that would suggest strongly that this is coming in due course. Yeah, ABC, 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 etc., etc. Consolidating the gains and eventually sending gold to higher grounds.